Well, one stock which I would like to just flag off, and that really went against the market grain yesterday, was BHEL. The stock was almost an F&O ban when I was looking at data in the afternoon. A Bloomberg screen is telling me that it closed almost at the highest point of the day, which is 30.6, up by 10%. So on a day when Nifty really, reversed, there are a lot of two-digit stocks and three-digit stocks which actually did well. So you had RBL, which did well for itself. GMR did well for itself, but the standout mover yesterday, in a sense, was BHEL. Hemang Jani, good morning. Thank you for joining us. Hemang, what do you make of price action coming back in some of these two-digit and single-digit stocks? Suddenly, the interest in these stocks at a retail level, at an HNI level, seems to be going through the roof. I mean, I don't remember when was the last time I saw a stock like BHEL see volumes and cash market volumes of about 96 million shares, 9 crore shares only on National Stock Exchange.
Yeah, good morning, Nikunj. I think the way we are seeing some of the mid caps and the small caps moving up is, I think, a function of more participation by the HNIs and the retail in the market. And since we've seen already that from the lows, the index has done well and few sectors are actually contributing to it. Typically, after a certain move in the index, you also see certain mid caps and small cap companies doing well, and one has to reckon that these PSU names that we are referring to, they had really gone down big time over the last many years. So the floating stock there is also limited, and it's easy to kind of pull it up. When you see a certain amount of interest in the market. So I think fundamentally, things are not very clear in terms of what can really take, these stocks up in terms of data points. But I think it's largely a technical adjustment, I would call it, and the lower floating stock could be actually helping the stocks to move up 15, 20, 25%.
Kunal, coming on the BHEL, we normally don't talk about BHEL, but yesterday the price action is something which cannot be ignored.
Well, absolutely, Nikunj. We were discussing this, I think, yesterday morning as well, that how the stock looks quite strong. There's been good volume built up which is happening into BHEL, and there is a pattern in the making. So I think the rally or the original rally for BHEL started not just, I think, 2-3 days back. It started from the start of the month of May. There was a very good volume candle, for BHEL. I think the stock had hit a multi-month, volume high, and the prices also started to come out of a, big correction. Now it broke the 50-day moving average, then went to a consolidation. So when you see a stock which is trying to come out of, deep, negative kind of trends, it needs, strong volume push up, and then it needs sustainable trends rather than more of volatility or more of high beta nature of trend. So I think after yesterday's move, BHEL, the stock price indicates that this is a stock which has definitely come out of its downtrend. The look at the volumes or the average volumes in last 2 months. I think the entire month of May as well as the start of June as well. There has been sustainable increase in volume patterns for BHEL. Now these are strong indications that the stock is coming out of big correction. I believe that this stock should not be looked at it from a short-term trading view. Yes, you might see the stock going into periods of consolidation because of the nature of the price trends, but I strongly believe that there is a new trend in the making. The next set of targets for BHEL, the 200 moving average, which is a very important technical indicator, I think is closer to 38 or 39 rupees for BHEL. I think that should be a next plausible target for the stock price.
Okay, that's BHEL. CK, yesterday you also flagged off the move in RBL. Let's take a closer look at that again. While financials were otherwise, seeing pressure building up, RBL stood out on the charts.
Well, RBL was without doubt the best performing banking stock yesterday. At one point of time it hit limit up, and then it finished the day well also. So I think at the current levels maybe there should be continued interest in RBL, because the stock has definitely come out of the big trough that it had dug itself into. And although higher levels did meet up with some profit taking, but that was quite understandable given that the stock rose all the way from 100 rupees to somewhere around 140, 145 levels. So I think some bit of profit taking which has brought the prices down is certainly understandable. So I would still look at RBL with a bullish bias and not really take bets against it. And that would mean that any pullback that we have intraday, say perhaps to the zone of 130, 32, I think that would represent a buying opportunity. I would expect if the market were to remain stable and the financial services area, if they were to be in demand today, then RBL could continue to perform on the top side.
Sticking with financials, a lot of fundraising news continuing to come in, Hemang, after M&M Finance, Shriram Transport, now JM also, added to that list. So the action continuing there, they're looking at a QIP for fundraising, and it seems that the space continues to be incredibly active.
Undergone over the last, let's say, 1 month, almost I think 1.25 lakh crore has been raised, and surprisingly during this period the market too has really gone up. But typically what you see is that when so much of liquidity gets sucked out, it puts some near-term pressure on the market. So I think given that there is so much of appetite, a lot of people would try and raise money, but I'm not too sure whether it would be the case across the quality of the companies or the market caps per se, because the appetite in this kind of a scenario is only for the large cap funds. So wherever the companies are able to raise money, it definitely would provide some sort of a comfort. So companies like Mahindra Finance, which have gone through so much of pain, would definitely be good. But I'm not too sure how many companies incrementally will be able to raise money at this point of time.
All right, stay on with us. Lots more to chat about, but I just want to remind our viewers as well that we had a conversation with the eternal bull, Rakesh Jhunjhunwala, spoke exclusively to the channel, tells us why he continues to remain bullish on equities.
So when does the mother of all the bull markets start then? Indeed, the big bull market which will be...
I think it has started.
It has started. So are we in for earning expansion, P expansion? What should we expect?
Well, we are in if a bull market, there is both expansion, P and EPS.
So if the market was a 50 over match, last question, which over we are in?
Well, I think bull markets are test matches, they are not 50 over matches.
So what will make this bull market a tie, and what will give the bull market schools a decisive victory?
Pardon? What did you say?
So if it's a 5-day match, what will make...
The 5-day match and then there is a series, no?
Okay.
A test match is a series.
It is such a great point. I want to just compliment you on the way you've really broken up the kind of opportunity which lies in front of us. But thank you for joining us, Mr. Jhunjhunwala. You are one voice people have been waiting to hear. Thank you for your time.
I want to give you an example.
Yes, please.
If any XYZ stock price ultimately goes to 1,000, do you remember whether you bought it at 150 or 250?
Yes. So you feel the same about the market.
The reasons will come later.
What could be the reason? I mean, I know you understand market cycles much more than anyone else. So what could be the reason which markets are not realizing, which you realized today?
Markets are realizing it, they are doing well.
No, Janta is not
They are
realizing.
not realizing it.
बाप को समझ में नहीं आ रहा. Let me put your
Liquidity driven. The reason is that we have had a bear market for 2 years. We have had some fundamentally, earnings have not grown for 5-6 years. Interest rates have gone down. So finally, I think this cycle of non-growth in earnings may be coming to an end, right? And the interest rates are, very much favorable for the stock market. And there is a lot of money waiting to be invested. And there has been a shakeout. The holding of foreigners has come down from 45% in the NSE 500 to 23%.
View coming in from Rakesh Jhunjhunwala. But let's get a move on, and Hemang, wanted to get in your take on some of the FMCG companies. You've got that annual report from HUL, and they've said that there are near-term ambiguities, but they're very confident in the medium and the long term for the prospects of the sector as a whole, and these seem to be the kind of sound bites that we're getting across the board within the space. What is your reading of the lockdown impact on FMCG in the long run?
I think clearly, if you look at the HUL, annual report analysis, one thing is coming out very clearly is that across categories, there has been a very strong growth, and one has to also keep in mind that there is a scope for a lot of premiumization, across some of these products. So whether you look at HUL or Britannia or Marico, with few exceptions, what is coming out very clearly is that despite lockdown, these companies are able to report a very strong, healthy growth. And, there has also been some amount of cost saving. So overall, we feel that, from a next, let's say 6 to 12 months perspective, some of these companies, when things normalize, would report much better growth and better margins. So we continue to have a lot of positive bias towards these names, HUL, Marico, and also to some extent companies like Britannia.
I'm just going to we're going to play out an excerpt with Guy Spears. I mean, the man who won the famous Warren Buffett lunch at an auction with his partner Munish Babrai. Let's hear him out. And then we'll get into more stock specific chat with CK after that.
I'm extraordinarily optimistic about the future of India. Look, India's going to end up saving us. The United Kingdom, extraordinary country, was saved by the United States. United States, 300 and something million people. India's, India's not quite ready. But it's going to happen in the next 50 years that India is going to save liberal democracies.
Well, I'm just going to steer the conversation away and talk about Godrej Consumer. CK, here's one stock where there is news. Here's one stock where the man who really was instrumental in turning things around for Godrej has decided to move on. The family takes over. I'm not getting into why, but the bottom line here is that individuals do matter. When Varun Beri came into Britannia changed. When there was a change of guard at Tata Consumer, the stock changed. Do you think the charts of Godrej Consumer are looking slightly shaky? And for someone who wants to trade based on this news, is getting an option to sell the stock down?
Well, I think individuals do matter, and I completely agree with you on that. And market does take a view on, kind of who's running the show and when do those changes happen. And but I would put all that as being a little subservient to the trend. Where does the news come? And this news in Godrej consumer product is actually coming when the stock is trying to rally and rectify the big decline that it had seen over a period of time in recent weeks and months. So when some negative news flow comes in, when the stock is trying to right itself, then it becomes a bit of an issue, because Godrej Consumer, if you recall, the high for that stock was actually made way back in August of 2018. So it's been into a bear market decline for what, I think almost 2 years or nearly that. So we are in the process of rallying up from that. I don't think at the low Godrej Consumer made any kind of a base which would then tell us that the bottom is in and that we are on to a rise. So we have to take the current rise as being only a rally, which means that any news which can be deemed to be adverse for the stock will probably result in some decline. And I would certainly take this as one of the factors which might push Godrej Consumer down. FMCG stocks are not really acquitting themselves very well right now. They have had their day in the sun. They came up along with pharma and all that. But I don't think they have really ridden that wave very well, except for a couple of them. So Godrej Consumer, not good news, unlikely to turn better from here. If market were to turn down or if FMCG stops getting patronized, this could be one of the stocks to fall from current level. Ergo, no buying at this level, whether the family is taking over or not, all that will be seen in the long term.
Hemang, I want to go back to SBI. There was nothing wrong with the numbers. If at all the moratorium was better than best excuse me, best of the private sector banks. Yet post results, whatever excitement SBI saw, it did not last even for one full day. Post numbers, it went to 195, 196, wherever, and Monday morning the stock came tumbling down.
Yeah, absolutely. I think, Nikunj, what people are right now focusing on, not only this quarterly numbers, but how the shape of things is going to be, in terms of moratorium, incremental slippages. Because at the end of the day, what really matters is the confidence that one has in let's say, next few quarters in terms of asset quality and the visibility part. So, and people want to be extra careful about the quality. So that is where probably SBI, falters. Also, we have the Supreme Court hearing on 12th on the, this interest rate waiver on moratorium. So those are the factors that definitely play in the minds. So I think that, in terms of valuation and the numbers per se, SBI definitely looks okay. But it will take some time for people to, get too aggressive on such names when things are not very clear.
Okay, let's also get you a comment coming in from Madhu Kela in a recent conversation with him. We also spoke to him about, we got some great anecdotes from him on really how how he uses his experience in the markets to try and understand best how to maneuver these uncertain times.
Everything in the market is indication. Nothing is a conclusion. सबका सुनना चाहिए, बरगुड़ना वही चाहिए जो अपने को समझ में आता है. And a lot of my mistakes in my life has been centered around this. And obviously we heard a lot of stories. We believed in a lot of people that yes, ये जो बोल रहा है वो कर देगा. Not necessarily all of them were dishonest. I would not grudge it against them. It is a learning for me that ultimately the only truth about future is that it is uncertain. And the only truth about market is that it is uncertain. So आपको कोई भी आदमी कुछ भी स्टोरी समझा रहा है, it is up to you to understand कि मेरे को उस स्टोरी में क्या लेना है, क्या वैल्यूएशन पे मैं वो स्टोरी को सुन रहा हूँ, what is the cycle in which we are learning, we are trying to understand that story. Then मैंने, again, if I bought, let's say मेरे पास 100 रुपए है निकुंज और मैंने 5 रुपए का कोई 2 रुपए का कोई शेयर ले लिया, तो 2 रुपए का 1 रुपया भी हो जाएगा ना, तो मैं सही लूंगा. पर अगर मेरे पास 100 रुपए है और मैंने 80 रुपए का कोई शेयर ले लिया और वो आधा हो जाए तो मैं नहीं सह पाऊंगा. तो ये क्या है, मैं कितना भी समझाऊंगा, कितना भी बुक आप पढ़ोगे ना, तो जो बोलते हैं ना हिंदी में, अपने मरे बिना स्वर्ग नहीं दिखता है. दिस इज वेरी ट्रू अबाउट मार्केट. जब तक आप खुद पैसा नहीं लूज करोगे ना, तब तक मार्केट नहीं समझ में आएगा.
Okay, Hemang, let's talk about telecom, and within that Vodafone. Would you take a risk and get into Vodafone at the kind of single-digit numbers it's trading at right now? Could it emerge as the dark horse while everyone's still focusing on a Bharti and a Jio?
You're saying, could it emerge as a dark horse? Yeah, it can emerge as a dark horse. It has been one of the best performing stock. But I think the way we look at this whole telecom sector is that the probability of Vodafone, getting back on track in terms of their debt and balance sheet and business, that is very low, despite the sector doing so well. Whereas the key beneficiaries of this entire, ARPU growth and the way the subscriber will, upgrade themselves to 4G would come to Bharti and Reliance Jio. So I think for the HNIs or the big investors who really want to play, they want to put a large amount of money in a quality stock where there is liquidity and there is a visibility. So in those parameters, Vodafone is definitely not fitting in. But to a retail investor who is actually looking for a quick movement, etc., and the fact that the sector itself is doing so well, it might provide some opportunities over there. But from an investment point of view, we have Bharti and Reliance as our preferred picks.
Okay, speaking of Bharti, in fact, that's the first on the list of top 5 stocks to watch out for in today's trading session. So you've heard some of the prime names, but here are the other stocks that you must keep on your radar. So yes, let's begin with Bharti Airtel. They've acquired an additional 6.3% in Robi Axeta, which is an entity in Bangladesh from NTT Docomo and their group entities. Dr. Reddy's, just this morning there were flashes that came on your screens. This is from the reports and agencies which indicate that as of now, Dr. Reddy's is going to hold back on the 300 crore rupee deal with Wockhardt. They're going to release 300 crores after assessing the impact of COVID-19. Do remember earlier there was a deal that was in the works in the month of February with respect to the select divisions and the branded generics of Wockhardt that Dr. Reddy's was looking to acquire. Mindtree, watch out for this candidate. Citi has maintained a sell rating on the stock with a target price at 760, saying that they're opening a 90-day negative catalyst watch. Mindtree is up nearly 33% from the year-to-date lows. Weak Q1 is expected, and the exposure to travel as well as the hospitality industry is not going to bode well for Mindtree. Meantime, TeamLease came out with its numbers post-market hours. You had the loss of 29 crore rupees delivered, and that's largely on the back of a one-time MAT charge, a MAT credit of 49 crore rupees. The revenues are by 15%. Margins, though, under pressure at 1.5% versus 2.2%, although their specialized staffing services business grew nearly 34% on year. We'll be getting the management on the show. And there's Bombay Dyeing as well. An EBITDA loss of 28.9 crores is what they delivered. Revenue from operations as well significantly lower at 300 crores, while the profits came in at 48 crores versus 1192 crore rupees. So it's been a weak quarter, to say the least, for Bombay Dyeing. Meantime, Hemang, wanted to get in your take then as to how you're looking at the entire mid-cap IT space. This latest report coming in from Citi talking about how the exposure to travel, hospitality, etc. is going to hurt the company. Where within mid-cap IT are you finding opportunity?
I think mid-cap IT, one should look at each company in terms of what are the triggers and in what space they are operating in. So I think companies like Mindtree, L&T, Infotech, Persistent Systems, these are the companies which are extremely niche in terms of their offering. Mindtree particularly is the best way to play the entire tech story across US markets, because a large part of the rally that we are seeing in US is driven by the top tech companies, and companies like Mindtree are the ones which are getting 40% of the revenue coming from there. So those kind of opportunities, or a persistent system which has a certain cloud-based product offering could benefit. But we have to be very careful about what company, because it is not as simple as just buying a certain stock at a certain PE and hoping that things are going to revive, because the market is becoming extremely complex in terms of which companies will survive and where there is a better growth visibility. So these are the companies that we think are much better placed in the mid-cap IT space.
Okay, that's the view coming in on mid-cap IT. In the meantime, we'll just be watching out for those pre-open rates as well kicking in. Do remember, in yesterday's trading session, we were sub the 10,100 mark, as you did have the markets pretty much erasing the last 2 days trading gains that we had made. So bracing ourselves for a bit of a mixed start, because that's what the rest of the globe seems to be indicating. All eyes on what is going to be the forecast or the commentary then from the US Fed. You did have the Asian region by and large, which was in the green with a mild flattish bias barring Shanghai, and on Wall Street, though there was a bit of pressure, the Dow Jones as well was down nearly 300 points. So wait by for those pre-open ticks as well this morning. But in the meantime, then, CK, wanted to get in your take as to how you're looking at the entire oil marketing companies. Where within that space is it that you're finding favor?
Well, I think if you look at the oil marketing companies, then BPCL is the only one with the news flow. And currently my belief or my take on the market is that the market is only looking at stocks which are having some amount of news flow in it. And because people are uncertain, so they feel a little safer to look at stocks which are having some news flow. Now, no doubt BPCL came out and said that they will do the divestment only sometime around December, but that does not seem to have really dented the trends in BPCL. So it has been maintaining an upward traction. So between the three main stock, IOC, BP, HP, I would continue to pump for BPCL and be on the lookout for buying opportunities whenever it dips down.
All right, fair enough. That's the view coming in.
Okay, well, when you're working from home, please bear with us. Sometimes the communication just goes haywire. Hemang, the mystery stock for me is Sun Pharma. Nothing great about numbers, but it is still at a 52-week high, almost at a 52-week high.
Yes, I think Nikunj, if you see, right from I think February onwards, the entire pharma pack is up almost about 42%. And I think what is going for some of the pharma companies which are actually making new highs, if you see Dr. Reddy, even Lupin, and couple of more, they are all at 52-week high levels. I think what people are realizing is that these companies, in terms of their product portfolio, have enough levers for growth, whether it's US market, generic opportunity, or specialty product basket, or for that matter, the Indian part of the business, where there is going to be a much better growth post this lockdown opening, where the prescription business was a bit affected. So I think people are re-looking at the pharma sector per se, and there are hardly few names where you would have a comfort. So definitely I think that is where companies like Sun Pharma would fit in. And there has been a buyback, and debt is not an issue for many of them. So we think that we should have a decent amount of exposure to companies like Sun Pharma or Dr. Reddy, Lupin, because next, I think, couple of years, there is going to be a decent amount of growth with very low risk from current price points.
Just scanning through some of the stocks where the volume action, I think, is something which I would like to, bring out again. And CK, I'll be repetitive with this one. Avan asked you, I think, on Vodafone. She's got a sense on from Hemang also on Vodafone. But CK, the trader doesn't care whether it's Vodafone or Bharti or whether it is Tatacom. All the trader cares is that where there is momentum, if the momentum is on the upside, let's buy, irrespective of the alphabets or the lineage. Do you think yesterday's back-breaking move in Vodafone has broken the back of the momentum, or this is just a trip and the stock could be back to 14-15 rupees?
No, I think it's definitely broken the back of its momentum, because you see, stocks like these get driven up only purely on momentum. Now everybody knows, and there is complete agreement that Vodafone is up the creek without a paddle. So whatever rise that comes in stocks like this is purely based on rumors, purely based on some outsized expectation and a lot of momentum. Now that momentum drove the stock up from around 4 to 5 rupees, where it was lying quite idle and quite quiescent, and then suddenly you saw this flare up in a flash on on a trot, going all the way till 12 rupees. And the retail loves such stocks, and especially when Vodafone on the futures is almost 1 lakh shares to a contract, retail likes to take away some 25 paisa or 50 paisa on this, and that, mind you, everybody considers himself capable of taking out at least a buck from a stock. Now that is what brings in a lot of volume into stocks like these. I think a whole lot of those people are now terribly trapped in the stock with the sudden reversal, and they have not been able to get out. I think there should be more pressure purely from long holders who have become adventurous. They are going to get squeezed out, so it will not surprise me to see this stock drop a couple of points more.
HDFC Bank is at 987. Actually, I'll tell you what, I'll request my producer to really fire two charts here while I look at the Bloomberg screen. The 1 month change in HDFC Bank, 1 month change in Axis Bank, and 1 month change in ICICI Bank. I'm comparing three banks here, but you'll be surprised that when the selling started in March 2020 and April 2020, all the banks came down in a synchronized manner. But in the recovery, this is the intraday graph today. Let's look at the 1 month chart here for HDFC Bank. It's nearing 980,000 almost. You will see a marked outperformance which is now coming in HDFC Bank, and when I say marked outperformance, relative. You have to compare it with ICICI Bank and an Axis Bank. With today's graph, Upasana, let's look at the 1 month chart please for HDFC Bank. There is a 3 month chart which tells you that we are down 3% on HDFC Bank, and the ditto move I think will come in for some of these stocks. Hemang, here's one stock where the COVID crisis in last 3 months has not affected the underlying stock price at all.
I think, Nikunj, typically in this kind of an environment, after such a big fall that we have seen, because of slightly better numbers that HDFC Bank reported, there is a sense that, looking at their exposure to retail category, etc., there may not be big nasty surprises. And market also has come to terms with the fact that Mr. Aditya Puri will be on his way out. So I think, because of the better comfort in terms of their loan book and overall, asset quality side, people are, getting more comfortable with HDFC Bank. But one has to also remember at what stage of provisioning and, this NPL cycle you are at, because Axis Bank and to some extent ICICI Bank have already completed that exercise way before, even State Bank of India for that matter. So when you look at over the next 6 to 12 months, where the surprises could come in terms of asset quality is something that one has to keep in mind. So HDFC Bank, no doubt, the book quality, etc., is extremely good. But if you look at their provisioning, particularly for COVID, on a 8 to 10 lakh crore book, the provisioning is barely about 2,500 crore. So that is the thing that one has to really also look at when you are looking at the quality.
Okay, let's also go across to Jayesh. He's got some insight with us. He's been tracking some data and talking us through the weighted structure of the Nifty and how it's changed this year. Jayesh?
There has been a dramatic change as far as the Nifty sector weightage is concerned so far this year, among which the most prominent one is the BFSI space, which currently makes up about 33% of the Nifty as compared to 42% at the start of the year. That is a near 10% drop in weightage that we have seen for the financial stocks. One man's loss is another man's gain, of course. So which are the sectors which have gained out of this particular instance is the IT, FMCG, oil and gas, telecom and pharma space that have actually increased about 100 to 200 basis points to their respective weightage. Pharma and FMCG clearly the standout winners amongst these, because if you have a look at the top gainers and losers for the Nifty as well, the pharma names stand amongst the gainers, and you have all the financials that are making their way into the losers list. The Nifty gainers so far this year have been Dr. Reddy's, Cipla and Sun Pharma from the pharma pack that you have. Bharti Airtel among the telecom stocks gaining about 25% for this year itself, and Britannia with double-digit gains as well. But the interesting list is the losers list, because all top 5 losers are from the financial space. You have IndusInd Bank, SBI and Axis Bank, which have declined anywhere between 45 to 70% for this year itself, and you have the Bajaj Twins also, which have declined more than 40%.
Thanks, Jayesh. All right. Hemang, we didn't talk about hero numbers with you. What are you making of the commentary? They're talking about saving costs, improving productivity of spends, conserving cash, and they're sounding quite set to improve productivity going ahead. And with a slate of new launches and so forth, what did you take away from the commentary?
I think clearly on the margin front there is a disappointment. Even on the sales front, there is a disappointment, 21% kind of fall. I think for some of the auto companies, what remains to be seen is that what is the revival on a month-on-month basis in terms of their plans, in terms of different areas, how the actually sales numbers are looking at. Because I think margin levers, some of these companies do have, but going forward, what market really wants to see is if you have a 50% of the distribution from the rural side, what kind of uptick are we really seeing on a month-on-month basis? So we have been positive on the auto pack for a while, Eicher being on the top of that list, and to some extent the tractor companies like Mahindra, etc. So two-wheelers, we have our preference for companies like Bajaj Auto, and we think that given the fact that a large part is coming from rural side and for Bajaj from export also, they are relatively better placed.
Right, Hemang, many thanks for taking time out and joining in, sharing with us your outlook on the markets. Just a few minutes to go as we will be opening up for trade.